Alright, so welcome back to my monthly Hargreaves Lansdown portfolio update. And in this series, I show you all of my own personal investments in my stock portfolio where I do my best to at least try and beat the market outside of lots of my other investments. Now, just looking back on last month's numbers very quickly before we head into the portfolio itself, the value last month was sat at £38,749, which was more than 7% down for the lifetime of the portfolio, and I think it may be the lowest it was ever at in its whole entire history. Now, just a month ago, the stock markets around the world were not in a perfect place, and the S&P 500, which is a good benchmark to look at, bottomed out around the 3,600 mark. Now back to today, we've seen quite a nice rally in the markets, taking us back to just over 4,000 or so. That's more than a 10% upwards move in just 1 month. Now, there's still a huge amount of pain in the stock markets, lots of pessimism out there, but some potential green shoots. Across this month, we saw the latest inflation data from the US come in a little lower than expected, which seemed to boost some investors' spirits out there. And the minutes from the Fed suggest that the interest rate rises might be slowed down a little bit, and that dreaded word, the Fed pivot, might be happening pretty soon. Now, we also had some good news from the producer price index, which looks at cost for businesses, and they were also looking better, meaning that the prices that people like us should get better as we watch central banks try to combat inflation. Now, one of the biggest culprits of inflation has been energy prices, and thankfully we're now seeing oil prices trend downward, so expect this to play a big part in the next few months as those gradually get passed through to consumers and then businesses too. Now, here at home in the UK, I can't say things are looking that great. We've just seen our latest inflation figures come out even higher than last month. Growth is not looking good, and we're probably heading into a recession. That's if we're not already in one. And according to the Bank of England, we're staring down the barrel of a recession we've not seen for 100 years. So yeah, things are pretty good. Lovely stuff. So clearly things not looking good for us UK folk, which is always a good reminder when it comes to investing that we should always make sure we're well diversified across many regions and many different sectors. Now, in the wider world, just before we head into the portfolio itself, we've just seen that China is going to implement further lockdowns in the country. Now, this could have some major effects depending on how long and how severe they do these. Expect supply chain problems, logistics and shipping issues, and potentially this might push some prices higher for goods, and just exactly when we needed to try and keep them under control with inflation numbers going through the roof. So just as things maybe were starting to look better, of course, as per usual in the investing world and the global economy, all kinds of things always happen. So again, another reminder, anything can happen out there. Anyway, with that quick market update, let's head into the portfolio, so I'll get this up on screen right now. So as you can see, we're in a better place than last month. We're creeping just above that £40,000 mark in the account. Still roughly a 50-50 split kind of those winners and those losers, but plenty to talk about this month as we go on. Now, as always, I won't go into every single company in detail, otherwise we'll be here for ages, but I will kind of pick out the notable ones this month. Now, from our losers here right at the bottom, the Bailey Gifford American Fund, which is one of my only funds in the account, remains the biggest loser in cash terms. Now, this was a really popular fund over the past few years, as all of their stock picks benefited massively from the crazy markets of 2020 and 2021. And as you can see, if I jump into what's actually inside this fund, lots of crazy popular stocks, as you can see, the likes of Tesla, Moderna and Shopify, who've all had crazy roller coaster rides over the past couple of years, and especially this year have been absolutely hammered. Now, I think a lot of people will be in a similar position here, because I actually averaged in over quite a long period of time, but clearly was too late chasing those gains. Now, I'm still happy for this to be a long-term hold, but I really wouldn't expect it to rally like the last couple of years. And it is a reminder that beating the market over a really long period of time is really, really difficult. And I'd probably actually avoid actively managed funds in the future and just do things myself, to be honest. Now, moving up, Alphabet, aka Google, is also in the red, but this was quite a recent purchase. Now, I actually sold my BP shares here a few months back and bought positions in this and PayPal with that money. Now, Google's been on a crazy ride over the past year and it's been really beaten up if you look at those year-to-date numbers. It's performed worse than the S&P 500 and the NASDAQ indexes. Now, in my view, that's a very short-term sell-off for one of the greatest companies in the world, which still, I think, has massive earning potential. I think if we just expect reasonable growth over the next couple of years, it's still undervalued in my view, with a very, very wide moat indeed, exceptional cash flow, and definitely a massive potential, especially in that cloud business. I also think they could spend their excess cash buying back some shares too, as they've got way too much of that on hand. Now, in terms of negatives, I did see that some shareholders think that the company needs a bit of a trim because they hire a ton of people, they have an awful lot of benefits, and they provide very, very generous stock options. Now, I know Joseph Carlson spoke about this recently. He showed a company called Texas Roadhouse with Google stock next to it over the past 5 years, and I'll put that up on screen now. Now, that's a restaurant beating out a tech giant, and it just shows how important valuation is and making sure that you keep your costs under control. Now, moving up to PayPal, nothing much to add here or to say. I think I paid a fair price. It's definitely been given a crazy run up over the past few years, which was a bit unjustified in my opinion, but I think long term, the brand is the moat. The platform is the go-to for consumers like me, and they can expand their ecosystem and wider in a growing world of e-commerce. I do think it'll probably have a tricky few quarters ahead still to come, but it'll be very interesting how consumers spend their money in the last quarter of this year. So let's look at those results when they come out in early 2023. That will definitely be the most important thing. Let's look at some other holdings here. So AMD, what a ride that this stock has been on. It's been cut in half in just a single year. Certainly lots of concerns about demand and growth, which was never going to be as fast as 2020 and 2021 with huge demand that was actually pulled forward. But I guess all the analysts and all the investors just assumed that that growth could just continue forever. I think that's been the trend of the last couple of years, actually. Some of these growth stocks, just because they achieve 20 or 30 or 40% growth, then the analyst models have just had that in there forever for the next 10, 20 years and thought, yeah, that sounds reasonable. So yeah, just a bit of a thought there. Anyway, I think it's down to much more reasonable valuations now, but it's still not out of the woods yet. You've got new graphics cards and CPUs that were released recently, and they seem to be tearing Intel a new one at the moment. Good margins, good growth in profitable areas like data center. I think that's really important. It's now really a time just for me personally just to hold, and let's just keep them executing over many, many years for me. Now, the overall chip market is certainly a volatile one, and we can include companies here like Nvidia who are also in the portfolio but doing a little bit better, and then TSMC too, who are not in the portfolio, but who Warren Buffett just announced a big stake in his last filings that he published. So I don't ever try and time the market, but if the big man thinks that it's a fair price to get into the semiconductor space now, then hopefully we're seeing some kind of market bottom, and now is a good time to get in for long-term investors. But again, don't take advice from people on the internet. Now, just before we go on, if you are enjoying the video, please do me a huge favor, hit the like button, make sure you subscribe, and also hit the bell icon too. It's totally free, and it really helps out small UK channels like mine get to a wider audience. I really, really do appreciate it. Now, back to the rest of the portfolio. So I think ultimately with the chip makers, we know the demand is strong for the future and everything will be connected and digitized. It all just depends really on how much you pay for that growth, in my opinion. And right now you have to ask the question, is the market being over dramatic, or actually are these stocks still overpriced considering the growth potential? And that's always the one you've got to weigh up if you want to invest in these individual stocks. Now moving on to the juicy subject that is Tesla. Okay, this stock used to be the highest stock in terms of percentage gains in my portfolio. And again, I've mentioned this a couple of times, but I think it was up about 120, 130% if I'm not mistaken at one point. Now, as many of you would have seen, this has really taken a beating this year, and it's probably one of the most widely popular and spoken about stocks on YouTube, across the investing world, pretty much in any media channel you can think of. So look, here's my thoughts. I think the biggest reason it got people's attention is that it went up, and it went up so fast, more than 26 times from 2019 to 2021, I think at one point, if you kind of move the charts around and play around with it. Now, there's no question that the company's in a great financial shape. It's not going out of business anytime soon, and they generate a lot of cash. Now, it all now depends on execution and how Elon behaves too. I think the whole ongoing Twitter saga is a massive distraction and a money drain, and I expect them to keep selling more shares also to fund that. Another issue for me is that if Tesla ever gets hammered again in stock price, Elon gets margin call, the stock is pretty much done for. It's going to keep going down and down and down if he has to sell those shares for that Twitter purchase. Now, clearly there's a lot of opportunity ahead. They sell every car they make, but I do really worry that a lot of retail investors, and that's who really holds this stock up, are in for a big surprise when their future gains won't be quite what they expect. I think there's too many channels and too much coverage of this stock purely based on the hype and the bull case, who's sucking lots of new investors who are expecting some, 100% gains each year, when in reality, this is very much baked in my opinion. I mean, let's face it, most Tesla investors are not in the green, or if they are, it's not by much, and only a few who managed to benefit from the 2019 run-up get to look like geniuses. But ultimately, if you're expecting the same results moving forward over the next couple of years, I do really think you're going to be extremely disappointed. Now, I'll still hold saying all of that. I'm still happy with my position relative to the size of the portfolio and my kind of personal level of risk. But please, as a reminder, putting all of your eggs into one basket and not diversifying is extremely dangerous and risky. And as much as I'd love everyone to make a lot of money, and I truly do want that, you're not going to see a huge rally anytime soon, certainly with the current conditions that we're in. So please just be really careful and remember to never take advice from anyone on YouTube to buy stocks, and look for contrarian and sensible views as well to kind of balance out those bulls, as there's plenty of downsides that you have to go over. Now, moving up to Apple, not much to say here. Great performance from the world's largest company. I'm sure we're all going to be looking towards those next quarter results to see how the consumer's doing over the holidays and if they can keep selling all those expensive iPhones. Now, as you might have seen, the iPhone 14 Pro is apparently the one that's selling a lot more than the iPhone 14 and those basic Plus models. So in theory, there's demand out there, but let's see if they can really shine at the holiday period at the moment, because of course they have been suffering as well from those supply chain problems with factories closing in China too. Now, I think a lot of people have already said this, but Apple would be the last hope in a crashing stock market. And if this goes, then everything else could be dragged down with it, because it already makes up such a huge portion of the S&P 500 and those other big global indexes as well. So just watch this space. UK stocks. Now, Unilever, as usual, running joke, does virtually nothing, and it continues to live up to its name there. Now, it does pay a dividend, it does have that going for it, and there will be new management coming on board soon. But I personally think it might be one for the chopping block, and I do need to consider it in the future of my portfolios. Now, I did make a video recently about the changes in dividend income allowances being reduced over the next couple of years, so I really need to think about which companies remain inside of my portfolio, because at the moment in this one, this is just a regular investing account. This is not a stocks and shares ISA. And I do think it's really important. It's going to be even more important increasingly to make sure that you make the most of your investments and keep them in a tax protected account like a stocks and shares ISA. Now, Legal & General continues to hold up really well in the portfolio. That's quite funny, actually, when you look at a stock like Legal & General, you know, in the relatively boring insurance sector, holding up really well against all of these massive, crazy growth stocks based out of the States. Pays a really, really nice dividend. But because of that, again, this is a stock that I'm going to have to take consideration in and work out from a tax perspective, just to make sure in the next couple of years that the dividends don't end up going over my allowance. So I need to figure that one out. Again, another reminder about using stocks and shares ISAs. Now, keeping on that subject, just generally in the account, there's no massive gains here, but as you can see, we're actually in the red overall. But I do want all of this eventually to be tax protected. And also, I only really want to hold individual stocks that have a large upside in beating the market. Otherwise, I may as well just follow the rest of my own advice and just hold index funds like I do over in my Vanguard portfolio. Now, as I always speak about on the channel and remind myself, very few companies beat the market in the long term. And the ones that do are the ones that have huge results and end up dragging everything else and carrying the rest with them. So I only really want to hold the ones that I'm interested in, think it's worth holding, and need to be very tax efficient too. Remember that at the moment, each of us gets £2,000 a year dividends tax allowance. And then the next year, as I've said, it's going to be cut to 1,000. Then the year after that, it's going to get cut to 500. Don't forget to check out that video I did on the latest autumn statement. Now, I know most people will never have to worry about that, but there'll definitely be a lot of people out there, and enough people out there who, like me, have kind of found themselves investing in a regular account thinking, okay, what do I need to do now? And how do I need to make sure I protect my investments from tax? Because it will add up over a long period of time. Anyway, watch this space. And it might be timed pretty well because I'll definitely be doing a best investing platform and a best ISA video for 2023 very soon. So probably early on in the new year. And I suspect I'll want to put my money where my mouth is too. So when I make that video, no doubt I'll start contributing to the place, and the best platform I think is the best ISA. So watch this space. Okay, so another crazy month in the stock market. I'm not going to predict the bottom or claim to know when time that is of the bottom of the market, but it's always a reminder that anything can happen, and it will, especially if you want to run the gauntlet and pick those individual stocks. Things change very quickly in this world, and they're totally out of your control. So make sure you're prepared for that. You find a plan that works for you and you can stick with in the long term. As always, I'm in this one with you. So do let me know in the comment section how you're getting on this month and what you're doing with your investments. And also make sure you check out this next video, as well as all of my other regular portfolio updates, which are all on my channel and you can go back and have a look at. Anyway, leave a like on the way out, subscribe for more if you're new. And as always, thanks for watching and happy investing.